Thank you, Mr. Chairman. I just want to follow up on this question around jobs. You know, we talk a lot about the EXIM and about jobs, and I believe that the EXIM Bank helps create American jobs and spur economic growth. But I also think that the bank's operations can be improved in certain areas. So I want to follow up on some questions I asked you the last time that you were before this committee. As I noted at the hearing last year, the core of the bank's work is to promote trade by providing financing for foreign companies to be able to buy U.S. goods. Obviously, that helps the U.S. economy, and we want to sell those goods, as you have been testifying to this morning. But in some cases, the foreign company purchasing those goods also has U.S. competitors, so helping that foreign company can mean that the foreign buyer gets a benefit not available to their U.S. competitors. So I want to start where I left off last time. Before agreeing to finance a deal, I just want to make sure I hear this right, does the bank determine whether the number of U.S. jobs that could be lost by helping a foreign competitor is counted into the calculation?
What we look at, Senator Warren, we look at, one, we review every transaction. Congress has made it clear that if the production that would be generated by a capital equipment export exceeded 1% of U.S. production, that would trigger a more in-depth review. So if a de minimis amount might go on the market, less than 1%, that's a threshold established by Congress over 30 years ago, that actually would say that the impact would be de minimis, would not be adverse.
I'm sorry, so just so I'm understanding what you're saying here, you're saying you don't do the calculation on how many jobs might be destroyed because a foreign company got a financing benefit that was not available to its U.S. competitors, unless it hits this much higher threshold. So in all the rest of those cases, even though cumulatively they may be a lot, you're not doing that calculation?
Well, what Congress has established for us in 1986 or 1984, 30 years ago, is that the threshold is 1%.
Well, I'm sorry. I think what Congress established is you must do the calculation if you hit that high threshold. The question I'm asking is whether you do the calculation. Is it only in those cases, and you are adding up the number of jobs lost and the number of jobs gained?
Well, for example, let me be very clear. Let's use an airline example. We have an airline that provides low-cost service in South Africa. There is no impact on the U.S. economy by that low-cost carrier in South Africa buying U.S. equipment to fly around South Africa. We don't fly there. We don't fly within South Africa. In those cases, no, there's no potential impact on the U.S. economy. So we look at every transaction.
So if the foreign buyer has no U.S. competitors, then you say, do the calculation. Another way to say it is you've done the calculation at zero.
We review every single transaction.
And if there is a domestic competitor, a U.S. competitor for the foreign company that's about to get the financing, do you always then do the calculation
always do
how many jobs might be lost by the U.S. competitor? I'm just asking how this works.
At that level, we do it at the dollar level. We do it at the dollar.
What does that mean at the dollar level?
We'll look at the benefit to the U.S. economy of selling that product. How much revenue comes into the U.S. economy?
I'm asking a jobs measure question.
We don't do it on a per job basis. We do it at that level, we do it on the economic impact. What was the economic benefit to the United States versus potential any economic adverse impact to the United States?
So is there ever a case in which the bank has decided not to finance a deal because of its potential impact on U.S. competitors and particularly on jobs?
Yeah.
And is that publicly available?
Well, what happens is, you're at a university. We're not, people don't, universities issue rejection letters. People don't like them from banks. So if
I understood banks did issue rejection
letters. They don't like to issue rejection. So when we sit down with a customer and we look at that situation, we'll have that conversation about, you know what, this is an economic impact here. We're going to do a more in-depth study, and this may not pass muster. So in those cases, sometimes they withdrew. So I know one particular case, the entity in Latin America withdrew. Let me just finish for a minute. And what happened? They still built the petrochemical plant. They built it all with foreign equipment. And you know what happened? We still are competing with that petrochemical plant.
I'm taking from what you're saying that none of this is publicly available. Look,
Oh, sure it is. If we do this, if it gets as far as doing the study and there's a vote, but frequently a client pulls out before that time.
I'm sorry, so you're saying there is publicly available data on how many times you have rejected a deal because it would cost American competitors jobs?
Our economic impact data is on the board. Is available after the fact that was one of the reforms we put in. So an exporter can say, I want to see what was the economic impact study you did on this transaction.
Okay. I think I've got it, but you're talking dollars here, and I'm asking a question about jobs. Look, I believe that the Ex-Im Bank helps create thousands of jobs in Massachusetts and across the country, and it does it while consistently making money for the taxpayer. I just believe that the bank ought to be doing all it can to promote job growth overall, not helping some companies at the expense of others. And that's why I think that the bank needs a rigorous process for assessing how its work affects U.S. competitors. And I think the bank should make those data publicly available with redactions if needed. I don't want to hurt anybody's feelings, but that it ought to be there so that Congress and so the public can review it. And I understand that the bank has taken important steps while it's been under your leadership, and you've moved it in that direction, and I hope we can continue to work on this to continue to move in this direction.
Let me add, we are the only export credit agency of the 85 around the world that does this. We're the only one that actually goes to the effort to say, is there going to be a net benefit to the U.S. economy?
Well,
we're the only single one. Everyone else says, in my example of that chemical plant, they're going to build it anyway. We can either lose once or we'll lose twice.
I appreciate that we may be more transparent than some other countries. The question we have to address is whether we are transparent enough, and those calculations are obvious enough when we're trying to evaluate jobs. Sorry for going over, Mr.
Senator Warren, that's a good question you raised, and I think it's important that we find out what it does to our jobs here. And that has not been answered yet, but a lot of people are concerned about it. Look at some of our airlines, as you know. Delta has raised that question, for example. Others said, look, they're not getting the financing that their competitors overseas, state-owned, are getting, which is a subsidy which they argue, and probably rightfully so, it costs American jobs.
Well, actually, I've heard Delta make this claim. They have never substantiated, they've never shown where, and in fact, Richard Anderson just last August indicated they're adding 1,800 new flight attendants this year alone. They're the most profitable airline in the country, perhaps the world at this time.